Hey, Greg Harrelson here with Century 21, the Harrelson Group, of course, with my co-host Abe Safa, also with Century 21, the Harrelson Group. And we're just, completing another week since the last time that we reported Myrtle Beach Real Estate news. Abe, thank you again for, joining me on this broadcast and sharing this valuable information. What's new this week?
Man, a lot of the same stuff that's been happening for a couple of months now. So
Yeah.
the market is still very, very active. Lots of buyers still around.
Hmm.
Inventory just continues to shrink week after week. It's shrinking.
Yeah.
I'm kind of waiting for it to stop and start to grow again, just because prices have been so good and homes are selling so quickly. But it's just not. The
Yeah.
demand continues to be there, and inventory is just getting tighter and tighter every week.
Yeah, and those of you that are listening, you probably heard Abe and I talk about inventory levels are low, and we're reporting on that, and we'll share with you where those numbers are again. But I think just recently, Abe, you and I started having conversations about pricing. How have prices been impacted by the inventory crisis, right? Because the law of supply and demand says this: the lower the supply, as long as there's good demand, the lower supply, then it's highly probable that prices will go up. But what ends up happening, the supply goes down, and then there's a delay before prices go up. So we've been talking about supply going down quite a long time. But can you share with us or share with them, because I know you and I have already talked about it, what's been happening with prices in the last 3 months and 6 months? Because I think these numbers are extraordinary, and I just want the public to know about it. And then I'll share some ideas on what they should do about it. But so where are prices gone and based on low supply?
Yeah, absolutely. You're absolutely right. So the less the supply, the more likely that prices will go up when the demand is still there. And so we're still seeing the demand. So I broke down the numbers right before we got on this call. And single family homes right now across the board, if you do a rolling 6 month relative to last year, average sales price is up 8.5%.
Hmm.
So that's overall. That's looking at new construction and looking at resales, right? But you and I, of course, like to break it down a little bit deeper, especially with the resales, because we do so many resale transactions with our clients. And when you look at those numbers, it's even more powerful. A rolling 6 months for single family homes, average sales price in the overall Grand Strand market is up 12.9%.
Wow.
So you want to talk about some appreciation over the last 6 months? I mean, there it is. We've been feeling it for a while. Anybody working with buyers right now, it's tough out there to find a property.
Yeah.
I've got a buyer I've been looking for 3 months. They're ready to buy, pre-qualified, ready to pull the trigger. They want a house between $300,000 and $350,000. And every single day we're looking, and out of everything in the entire market, we're able to find 5 homes. So we're going to show them 5 homes this weekend. But there's just not much out there for people. So now here's something that's even more impressive, right? Because we've been talking about inventory getting tighter and tighter every single week. That rolling 6 months is up 12.9%. If you go back and only look at the last 3 months, okay, it's up 18.7%, the average sales price.
That's
So we're starting to see these buyers are forcing the prices up right now.
Yeah.
And you see them many.
Yeah. So if somebody had, and is this the right way to calculate it? If somebody had a $200,000 property, and let's just assume they had no mortgage on it for easy calculation purposes. They had $200,000 property. Let's just say they have $200,000 worth of equity in there. That equity increased in the last 3 months by 18%.
Yeah.
That's over $30,000.
That's huge, and it sounds unrealistic when you hear that. But here's what makes that happen, right? So we have appraisers out there we're having to deal with, right? There's definitely a huge supply of buyers, not enough demand, so buyers are willing to pay more than what they have in the past, right? So you've got sellers raising their prices, you've got buyers willing to pay those prices, and then you've had appraisers the last 6 to 12 months. I don't want to say undercutting because it sounds like a negative term. They're doing their job, but they're not able to appraise these homes based on what buyers are willing to pay for it today. They're appraising it based on what the last 6 months comps are saying. So that what ends up happening is one deal sneaks through, another deal sneaks through, then you have a couple of cash buyers, and now you've got a couple of good comps on the board to justify the higher prices. So it takes us a while for those prices to really start kicking in. And that's why you see it, even though inventory has been dropping every single month, these last 3 months is when we're really starting to feel the effects of it by these prices all of a sudden surging in the market.
Yeah. For our loyal listeners out there, I hope this is coming full circle now, because we've been reporting again on low inventory, and we've been sharing, hey, this is an opportunity. I never have a crystal ball, and I can never say this is what's going to happen with the market, but we can look historically, and we can just apply some fundamental laws or rules to just, to economics, meaning supply and demand. When supply is down and demand is strong, prices go up and sell times go down. That applies for apples. It applies for oranges. It applies for cars. It applies for houses. It applies for anything that's out there and that's being sold. And so we're just using common sense, and we're starting to see the numbers now are revealing, the appreciation. So there's an opportunity. One of the things that I always want to say, before you get into the numbers to the audience, is this. We're never in the business of talking people into selling. What we're doing is we're in the business of empowering the consumer, property owners, with information. And then with that information, we're hoping that we can help guide you to make good, sound real estate decisions. If that means selling, great. If that means holding, fantastic. We're not attached to the transaction. We're attached to make sure that we're delivering valuable information and making sure that you're an informed consumer. With that being said, if you are thinking about selling a property in the next year, within the next year, you may want to think about bumping up your plans now. Now, if you're not thinking about selling in the next year and you're thinking about staying put for a few years, then none of this stuff matters. It's great to understand where the market is, but you don't have to deal with, there'll be highs, higher highs, there'll be lows, there'll be lower lows. The market will go up and down in the next couple years. But in the next year, we're probably going to see some sort of flattening, because it can't go up forever. There is a point where it starts to flatten out. Again, I'm not trying to say, oh, the market's going down. It's just common sense that these things flatten out at some point. So if you really want to maximize your the amount of equity you can pull out of your property, or maximize the selling price, now's a good time.
Yeah, absolutely. And there's other variables that are going to come into play as we get to the election and into next year. You've got the economy, you've got the uncertainty in the stock market right now, you've got the COVID, which kind of seems like right now it's kind of quiet. It doesn't even feel like that there's anything happening in relation to real estate sales, right? The market's just super active. You wouldn't even think that there is a pandemic out there still. So if there is a second surge going into the winter time when the flu season starts, of course, that can always impact the way things are right now. And while we're on that note, there is one bit of news that I do want to share. The county just voted to extend the mandate on the mandatory masks in restaurant and retail stores. So that's going to continue to go on. But again, it really hasn't impacted our ability to sell a home right now.
Sure. Yeah. Well, good. Well, let's look at the numbers, because I know you have numbers for us.
Oh, absolutely. All right. So let's switch that over to the numbers. Okay. We're going to start off with the single family homes right now. Super strong number. Almost 50% of all single family homes are under contract. Last week, it was 48.73. So we're seeing a slight uptick. Again, super strong. And then when we look at the prices in there, you're going to see much better prices right now going pending than we have in the past. Switching over to the resale.
Can I make a comment on this?
Of course, yeah.
Yeah, and it would apply to either one of these slides, so you can leave that slide there. But on this particular slide, you see on market 3,100 properties, right? Yes. And then we see pending are roughly 1,500. So let's call it 3,000 and 1,500. I believe what that means is there's also another thing that we would know is there's about 1,500 resale homes on the market right now that are not under contract. Would that be an accurate statement?
Yes, correct. That's correct.
Okay. So let me that's an accurate statement on supply. Well, let me put this in perspective of demand though. In the month of September, or let's just go back the month of August. In the month of August, our advertising efforts pulled in around 2,500 new buyer leads. meaning we had about 2,500 people in the Myrtle Beach market that, well, they may not have been in the Myrtle Beach market, but 2,500 people that logged into our website and asked us to give them a call to talk about buying, or they called us direct to talk about buying. So just in the month of August, we had more new buyers than there is inventory on the market for resale homes. And we're not the only, company in town,
Right.
right? There's other companies that are generating buyer leads also. So that just kind of puts demand in perspective. I mean, just one company had over 2,500 new buyer leads. That's not buyers in our database. That's brand new buyer leads. Now, we do have a big advertising budget. So when we take listings, we advertise and do everything we can to make sure we find buyers. We don't just stick them in the MLS and wait. So maybe we have a little bit more than most because of our advertising budget, but that's just us. So think about how many buyers there are looking for property right now and competing for those 1,500 listings.
Let me give you another number to put things in perspective. Last year, September, 915 homes sold.
Mm-hmm. Wow.
So if you got 1,500 resale homes on the market, let me pull up the overall homes because that's going to be a little bit more. So 2,700 sold. So you've got 2,700 roughly on the market right now total.
Yeah.
Okay. Take out the to be built. That's about another 700. You got about 2,000 homes that people can buy right now.
Mm-hmm.
So last year, month of September, we sold 915 homes as a market.
Yeah.
So that's not a whole lot of homes to choose from.
No. And hence why there's multiple offers. The offer prices are coming, like you don't see low balls in today's market. There's no low ball offers. It's usually really close to full price, if not full price or a little bit more. And that's again an indication that buyers are competing for homes. They're competing, and whenever there's competition, then some buyer has to win. And guess what? The winner is the person who pays the most price, the highest price right now. So that's a good position to be in if you're a seller.
Absolutely.
All right, what else you got?
Here's the new construction homes.
Okay.
So 52%. Last week it was 50.57, so up 1.5%. That's pretty significant there. Again, back out the to be built, that number becomes crazy. You're in the 70% range. At that point, 75% range of every new construction home out there right now that's available is under contract.
Yep.
And we'll see how the land, you'll see reflection there in the land as far as you see that's gone up as well. So let's jump over to the condo market real quick. 33.78% is under contract, almost identical to last week. So really no change. That's a little bit surprising. Now that we're past Labor Day, mid-September right now, we thought that this would start to get a little bit weaker. Mm-hmm. And then it hasn't. So over a third of every single condo on the market right now is selling. So that shows you how much demand there is right now in this market.
Mm-hmm.
Oceanfront condos, 19.73%. Last week was 20%. So a little bit of a dip, but that's pretty much flat. So again, that's continuing to be pretty strong. Going into middle September still, and to have that many under contract is a sign that we're in a very strong market right now.
Yeah. On the condo market, this is the oceanfront, but let's talk about the non-oceanfront, because in our MLS, when we talk about condo, that would also include townhomes and townhouses, that type of, they're technically kind of condos also. And they could be well off the beaten path or well off the resort areas of our marketplace. One of the things that I'm anticipating, and I feel like it's already happening, but I haven't seen enough examples of it to declare this is an actual trend. But if and I was to guess a little bit, I think that we're going to see this as a trend. As inventory for single family homes decreases even further, new construction or resale, and prices continue going up, then the buyers, they have three options: not buy at all, So forget about that option. Let's just say they have the option of now going further out and buying in the outskirts of our market. That's why Conway, Longs, Aner, Loris are all seeing increases in their market, because people are being pushed further out to be able to buy within a price range. But the people that don't want to be pushed further out, they want to stay within the Myrtle Beach, North Myrtle Beach location, stay a little bit closer to the ocean, not get too far, inland. Their option is to go look at townhomes. So we should be seeing that some of the buyers that are failing to be able to purchase homes in kind of the center of our county, they're actually now going and looking at townhomes, or what they call paired ranches. That could be like something that looks like a home, but it's really a duplex and it's two townhomes side by side, or townhome communities. So I'm starting to see activity build in those areas, and that's a function of price and availability, or at least proximity, location, price and location. If they have to fit in that under $250,000 price and they want to be in Myrtle Beach, they have to look at townhomes now.
Yeah, and those paired ranches have always been in good demand. And yes, I'm agree with you that there is more demand right now for those, because there's not many to begin with on the market. But now, when you can't find a single family home, that's actually really good replacement for a single family home.
Like I just listed a townhome in the mid 200s, and it's got 4 bedrooms, and it's around 2,000 square foot. That's a bigger house, square footage wise. That's more. That's more square footage than you would get for that price if you were buying a house in a similar area. So that becomes a viable option, and it has a garage. So that becomes a significant, it comes in play. Let's just say that.
Absolutely. All right. Now, finally, let's look at the land. 16.58%. Last week was 15.94.
Yeah.
So up a full percentage point, just about.
Weren't we, when we first started reporting, were we under 10%?
Oh yeah, we've been for the last 4 or 5 years. It's been somewhere in the 7.5% range.
Yeah,
up until this year.
So the activity's increased by over 100%.
Yeah, hands down.
It's interesting, like when it's interesting, the series of dominoes, right? Residential sales, their inventory goes down, prices go up. That's a domino, right? Building costs go up. Now all of a sudden, more people push to townhomes. More people are pushed to land. It's like if you just follow the trail, it starts with that supply of residential homes. When that supply goes down, it usually triggers a series of events for other categories, and we're just seeing that throughout.
Yeah, absolutely. Yeah, you see it trickle down to land. You see it trickle down to paired ranches and townhomes, as you mentioned. I mean, just pretty much the entire market right now is just as strong. Yeah, I don't see anything that points to any weakness at all in the market right now.
Now, if there is ever a reversal, like it kind of starts with homes, and then home and new construction, resales, and then we look condos or townhomes, land. That's kind of like the land started seeing increases at the end. They were the last one to see the increase. Single family homes were the first one to see the increase. And when the market shifts, whenever it does in the future, the first one to see the decrease would be land, and then it'll reverse and go all the way. The last one to see the decrease will be the homes. So it goes homes to land, but in an increasing market, and in a decreasing market, it goes from land to homes. That's how things will work. So if you have something to sell, if you have land that you're not going to be building on, again, this would be a good opportunity to take advantage of that.
There's no question. Anybody that has land that's never going to build on it, I mean, it doesn't matter what the market is right now. You need to just get your money out of it and move on to another investment.
Absolutely.
Yeah.
Well, good.
Okay, well, that's all I have.
Okay, well, there's some powerful numbers. And again, I'm Greg Harrelson, Century 21, the Harrelson Group, and I'm in the business of helping, consumers buy and sell. So if I can do anything, or of course, Abe Safa, he is in the business like myself, hoping that if you need any of our service, you'll reach out to either one of us. Our cell numbers are right down at the bottom here. And until next week, we'll keep our eyes on the market. We'll keep getting properties sold, selling them for high prices, and report to you what happen in the following week.
Absolutely. Enjoyed it, Greg. See you.
Thank you, man.